The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. It is another day where we got to just kind of scratch our heads out here and see what's going on. If we look to the actual numbers, probably not as definitive as we'd like, off 11 points on the S&P cash, below 2100 on the S&P at 2096, and let's call it 2097. Just a hair over 2 billion shares. So again, we're in this kind of lighter volume fugue state that we've been in for, what, a week now? 2 weeks as we've gone up higher through expiration, through fund buying, a little bit of pullback here. The question, I guess, for a lot of people is, should they keep their cash in the U.S. markets, or should they look to the European or Japanese market, since there's a lot of QE going on there? Therefore, maybe that's a faster horse. And that's been the discussion for the last 3 or 4 days, at least on Financial Infotainment TV. For here, we just wanted to sit back and wait. Let me put it this way. I don't have an abiding belief in a higher or lower price for the most part. And that's what makes it very problematic, with the exception maybe of a couple of stocks, individual stocks, to see it. My models have always, and over time, in fact, I've read other work by people in behavioral finance. About 50% of a stock's movement is almost always linked to the broader markets. So if you don't have the direction in the market correct, most of the time you're about half wrong to begin. And if you don't have an abiding belief in the direction of the market, even if you're wrong, then you're probably maybe playing the market too much. As I think of this, I'm pretty much, I think I got one position long. I had Doug, we got out of it. Is it up a little bit more? Yeah. Could we made a little more? Yeah. But I've always believed in the old adage, when in doubt, get out, unless you have a huge signal to stay out. And that's the reason I have one long stock out here, mostly because of other reasons other than the markets. And I think maybe it has enough juice in it to actually go against the tide. But I can't really find a lot of other stuff out here that would qualify as that, i.e. going against the tide. But when a market was quiet, it could move very well. And I don't know, I have about a 10% buffer from the bottom, so we're in it okay. But I'm not even a big fan of holding that long if market conditions continue to deteriorate. I suspect, as I've said the last couple of days, one of the original people on TFNN was a man by the name of Tim Ord. And very interesting trader. His trades were so long, though, that everybody started to see grass start growing up under their feet. And he's pretty good at those. Unfortunately, most traders don't know how to sit on a position for 6 or 8 years. And, of course, if they come along, well, they're not going to get it. I think that there were many opportunities to trade in and out of the positions that he held fairly long. Pretty big signals. But one of the things that he always came up with or talked about was, if you hang out at highs long enough, you're going to break out. And it may be a false breakout. It may be a real breakout, but you do not know. And unless you have some kind of abiding belief out there, it is tough. Now, for me, we've got so many cross currents out here that I want to be in as much cash as possible for the opportunity to play when I know, or at least I have an abiding belief, and I use that word almost in a legal sense. I want to make sure I have an abiding belief that I have an edge in the marketplace. And for the most part right now, I know that I have a feeling that we are probably 80% or better probability that we're going to go up and tag higher prices and probably gap over the recent highs in the S&P cash. And the question is going to be, does everybody go sell right then? And or does somebody basically, say, hey, I'm going to buy this breakout, and we actually get a breakout with volume. If we did, I'll buy the pullback. If not, I'll short the stock. But there's probably some fairly decent risk reward on any kind of gap up and away in this marketplace. I think that we're going to get it. And the reason why is I think we're getting and starting to get a bunch of people out here that are short the market. And I think we're going to pop. And these are going to be the strong-handed shorts. There are going to be some weak-handed ones. But for the most part, they're going to be the stronger-handed shorts. And those shorts are going to not cover. So we're going to go up there, we're going to get light volume, and that will be it. If volume comes in, then we are continuing in the trend. But right then, I just don't see a clear path and a signal. In fact, if anybody's ever had my newsletter, they know I put charts in there every day. Sometimes, especially when the market's going to turn, I'll have 40 or 50 charts of things that I'm looking at. It's been hard to get 2 or 3 or 4 stocks that have been at highs with either higher or lower volume that really make me think that there's some good positions out there to be had. Doesn't mean the market won't move. Just means that probably there's not logical places where I have my back to the wall, either highs tested with light volume or lows tested with light volume, and I'm going to get a reverse of a trend. But it continues to be problematic. Anyway, we're off, well, let's call it 12 points on the S&P cash, 2.12 billion shares, 2.13 billion shares on the New York Consolidated Tape, which is good. But again, it's not anything to really write home about. We're not seeing people throw the baby out with the bathwater as you do in most kind of deals. I also see a few stocks that I wanted to short, and I suspect that those basically they came out with some downgrades on those stocks. And I don't believe the downgrade. I suspect the downgrade is to get a bunch of people short. If they really wanted to downgrade the stock, they wouldn't tell us humble peasants out here in Rube land that they were getting short these stocks. But my guess is they want everybody to get short. They're going to come out with some bogus news. They've already confirmed it with the company. They're going to run a lot of the shorts, and that will set some kind of high in those stocks I truly want to be short at. So I'm kind of waiting, as they used to say, for the whites of their eyes before I start shooting. And other than that, we're waiting for some history.
Then it's all just a little bit of history repeating.
And is ding, ding, ding. Got a few things going on here. I'm just keeping an eye on them all. In 1933, with the nation's banking system in shambles, President Franklin Roosevelt orders a nationwide bank holiday. On the first day in office, Roosevelt issues an executive decree under the Emergency War Powers Act. Banks must close to prevent a run on their deposits by frightening customers and to give back government authorities a chance to reform their finances. The stock exchanges, the commodity index, and the stock markets are also closed. And they were closed for a week, and basically things kind of worked out. Luckily enough, of course, when the government points a gun at your head, you don't have a lot of opportunities to do anything else. And almost by fiat, they put a low end to the markets here in 1933. But growth was tepid and poor all the way until after the Second World War, of course. And I don't know, maybe you can make a case that we've been doing the same thing since the major blowups of the .com and then the housing bubble. And now maybe a massive, almost a tequila hangover from QE. And as we like to say, 1 tequila, 2 tequila, 3 tequila floor. FLOOR. Anyway, yeah, that's kind of interesting. Just a random thought, because the markets haven't been doing a lot of stuff. I watched Fantastic Voyage. It's a 1960s, late 60s movie. I don't know if anybody else has seen it. But when I grew up, I thought it was a pretty good movie. And now that you get Netflix, you watch a bunch of movies out here, and you start thinking, what's going on out there? And I'm thinking, really? Was this a great movie when I was 10 years old or whatever, when I saw it, 10 or 12? And I get to thinking, and I said, okay, well, I'm going to watch a few minutes of it just to see what's going on. So I'm kind of fast forwarding through this thing. And if you're not familiar with the movie, the theory of the movie was that scientists had figured out how to shrink anything down to an infinitesimal size. And some great leader with information that we needed to have was hit over the head and had a brain aneurysm or something. So they're going to shrink a giant submarine filled with doctors and shove them in, shrink them, and shoot them in the neck of the patient with a big hypodermic. That, of course, they shrank the hypodermic too. It was like a big floor-standing hypodermic that was turned into something small. But of course, they had all this technology, and they were all running around. They had all these computers whirring and fizzing. And then there's always something. And this is where I've made money in the stock market and why I'm bringing this up. There was something that was out of place. And that's normally when you start making money, is when you see something maybe someone else does. And I saw it in this movie last night. I just thought I'd bring it up. Okay, they got all this technology. They got all the space stuff. They fly them in on the latest jets to work on this guy, all the doctors. They have all this whiz-bang stuff. They got laser guns. They've got all kinds of stuff. And then they go to communicate with all the doctors inside this human, going up and down aortas, through the heart and everything else. And they're using Morse code. Well, these guys spent money on all kinds of stuff, apparently. But then they have to use Morse code to talk to the people inside the body. This isn't like 1960s. I think Morse code kind of went out in probably, the 30s? I think everybody started getting an AM radio then. So who decided to skimp and use Morse code? Anyway, just a thought. But a lot of times you'll see something that's just weird and stands out. And that's how you make money in the market. Probably not going to make any money on this one, but I had to turn off the movie. What's going on with Morse code in this jet age laser technology? Now, anyway, if you watch the movie, you know what I'm talking about.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we're coming back, everybody in the den, Tiger's Den today, is talking about old sci-fi movies. And I'll just have to bring this up.
Shall we play a game?
And the other one, the other great sound clip.
After very careful consideration, sir, I've come to the conclusion that your system sucks.
Oh, I love that movie too, War Games, from 1982, I think. Someone said 83, but I think it was 82 or 81. I think it was a couple of years earlier than that. Always a great movie. The magazine Fast Company had an article out the last couple of days, starting to get a little bit of traction out here. And Mark Wilson, who writes for Fast Company, says, you guys realize that Apple's iWatch is going to flop, right? I'm just saying what a lot of people are thinking. And a lot of people are, I think, are kind of discounting what this market's going to do. Whether it flops or not, we're not going to know for a while. And a flop for them may be something like the iPad, which is now a minuscule amount of their earnings. They have to sell 4 iPads to make the profit of 1 iPhone. And that is, in a nutshell, the big profit promo with Apple. Of course, we've got, what is it, the 9th, which is on Monday. And that's when Apple will be having their Apple rollout. I can see that we could go higher into that high just on Apple alone. And that may be our part where we get a little bit of pullback here and a little bit of pop on Monday, maybe a gap up on Monday. Everybody's going to be flogging this one out here. And, of course, we're going to have all the people in fund land out there saying this.
Well, let's put some lipstick on this pig.
And try to push it out a little bit higher. And it may be justified, but it's going to be kind of hard to figure out exactly what's going on with this for a little while. They've only ordered 5 million parts or parts enough for 5 million iWatches, which isn't a lot to move the needle. They're trying to, through some of the minions that Apple has, trying to push the idea that they're going to be able to get margins up on the product by selling more expensive bands and jewelry. And probably the most interesting thing that Mark Wilson in Fast Company said is that this is a giant ego trip for the design engineer in Apple who, in fact, someone said it yesterday. They said, I'm going to, basically they were kind of jesting the bears out in the marketplace yesterday. And I've always been afraid to shake my fist at the trading gods because normally they make me eat my words fairly quickly. But this gentleman was doing it, and I reminded him when he said he was going to go out and feed the bears that there's a great movie called Grizzly Man. And I'll give you a spoiler here since it came out in 2005. The bear ate him. So just be careful on that. But the point is that the big design engineer is getting awful cocky and trying to make a name for himself. I think he's trying to outshine Apple itself and maybe reading his press just a little bit too much. And as they say, pride comes before a fall. I would watch out for this product. We don't have a bill of materials yet. When we get it, I will share it with you. But that's going to be the all-important thing. Are we talking about a product that has 30% margins like the iPad? Are we talking about a product that's got almost 70% profit margin like the iPhone? And it doesn't mean, you look at that 70 to 30, you go, okay, every 2 iPads they sell, they make the same amount of cash. That's not even close, and that's not the way it works. It's actually about 4 iPads to make the profit on one iPhone. It is logarithmic the way that works for margin, and you need to be well aware about it. But my guess is that we are in the calm before the Apple storm. Apple is going to be enough, and they'll be talking it up. And pretty soon they'll be talking about Apple chips in our head, and there'll be all kinds of pie-in-the-sky stuff. The question is and will be, what do they sell after that first 5 million that they build? Because there's enough Apple cult-type folks to buy the first 5 million. It's after that that really matters. And a lot of times when they say that they've ordered parts for 5 million, they may be lying. They may order parts for 3 million and they go, oh, we sold out of 5 million. And by the time the quarter runs around, who's to know? Anyway, we'll be back in a minute. We'll get into a little bit more news, and then we got some charts to look at.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And yes, I got a bunch of emails out here during the break. You can email me at path@tfnn.com. Yes, a lot of things are bothering me today. I've seen a lot of things that just don't make any sense at all. Not only in the stock market, but how can the country, India, that gave us the Kama Sutra, the book of all the stuff, ban 50 Shades of Gray? I don't know. It's like black is white and white is black. And I don't know. I'm just scratching my head today, just trying to figure out how all this stuff works, because apparently nothing in the world is making any more sense anymore. Anyway, more news out here. We had a kind of a big bump in the IBB and some of the other stocks in healthcare-related stuff, and it seems to me like a lot of people really didn't care to read more than the first sentence in a blurb that came out. We've got the Supreme Court of the United States questioning the lawyers in the ACA case, and this one thing came out, and it just said Kennedy said he was siding with a plaintiff in the Obamacare challenge heard Wednesday would affect the relationship between the federal government and the states in a way the Constitution doesn't allow. His vote is often seen as a tiebreaker in the court. But all they saw was one comment saying that if they scuttled this, that all the exchanges would go broke. Like he was saying, it didn't really matter what the law was. But if you basically went through the rest of his about minute or 30 seconds of discussion after that, he said, why I can see maybe I could vote that way on the rest. Looks like guys going to lose on the rest. And that didn't get reported until a little while later. And basically, there's a lot of manipulation of the news going on there, so you want to watch out. But I noticed it probably most significantly in HCA. We had a big bounce in HCA holdings with a lot of volume. Basically, they just ran the table here today, went higher than the last major high on January 12th. That was at $76.18 with 4.5 million shares. We got 9.4 million shares today. They went above it. It's closing below it. And this is the kind of action that I think you're going to see, which is a lot of chop out here as we try to go in to the end of the day. Maybe we pull back a little bit more next couple of days. Monday, it's going to be very hard for me to see that Apple does not run. When Apple turns on its massive, supermassive, not a black hole, but a supermassive PR engine in which they basically get to the point at some length of turning lead into gold, if you believe the PR machine. And there's more than enough out there to make me think that maybe Apple doesn't go down, but it's going to have a hard time going up as it's reached the law of large numbers. And that is that they need another product that has some kind of 70% margins if they're going to continue to go a lot higher. Doesn't mean they're going lower, but it does mean they're getting a lot higher. And you can really see the volatility falling out of Apple, especially the last 4 or 5 days out here. And I had somebody ask me to replay it because they only caught a part of it. And I guess for some reason it's not on any of the archived shows, or the guy couldn't find it, so I'm going to play it again. But I think that there's a lot of value in what El Arian has been saying out here for the last 3 or 4 weeks, so I want to play this clip once again, too.
So what we need is for markets to consolidate in the middle. Instead, markets go one way or the other. So when we have really good days, that actually makes Fed officials nervous, right?
Because really good days in the markets, you mean?
Really good days in the markets because it takes prices beyond what's justified by fundamentals. They worry about excessive risk-taking.
Well,
they worry about
down
financial
days either.
And they don't like down days either, right? So what we need is a period of consolidation. The trouble is that the markets won't stay in the middle. The markets will either be discouraged by very low rates and go into high risk-taking, or will switch the other way around.
And basically, he's saying exactly what I'm kind of thinking right now, which is we're building up a great deal of steam, and we're probably going to break out, I suspect, probably the wrong direction, i.e. it's going to be a head fake. So if we tank for a little bit and then there's no volume, then we're probably going to rally and go through the top. If we pop through, gap up, and there's no volume, then we're probably a false breakout to the upside. And as the more and more that the federal government or people like the Fed try to keep markets, and this is all around the world, try to keep them from moving, the more they want to move. And eventually they will pop, and it's almost always a huge break, and one that is much worse than just letting a little air out of the balloon at the time, which is what the Fed's trying to do for eventually raising rates and everything else. And if you look at a lot of the action out here, especially in the dollar, it confirms that you're probably looking at higher prices higher interest rates. We've been tooling around this area of about 96 and kind of bounced through it today. Let me go back here and look real quick. Got to 96.04 on the dollar index, and of course that's put pressure on everything. We've got gold that's flat. We've got a little bit of push in crude. It's up just a little less than $1. Gold is settling under $1,200 right now. And the question would be, in fact, someone emailed me earlier today and said, well, would you short gold here? And I said, nah, I think it's got to break 1183, and then if it does, you probably have some huge moves from this very tight consolidation, 30 points higher. Let's call it that, between $1,200 and $1,230. This thing's been building up a lot of energy, and if we could finally get the kind of blowout low that would make me want to buy gold, and maybe that basically comes together when we hit 98 on the dollar index, which is somewhere around my target. So I may be getting interested in gold. I hope everybody that's long now gets their money. I have no dog in this hunt, but for me to really, I like to buy gold when there is blood running in the streets, and I still just have not seen that, especially when we start looking at some of the other stocks out there. Of course, Silver Wheaton came out yesterday and went back to the well, and it's going to water down its shares. The question is, how much does it truly water down the shares? I haven't had enough time to dig through the well out here. You had the kind of volume that could break out the 1869 low of December 17th. It hadn't done that yet, but my guess is that you had enough of that energy. You were pretty much in that candle yesterday, and that would open up the 1657 low from November 5th. And it may be sharp. In fact, I'm pretty sure that any kind of move down in gold will be incredibly scary, and it will be the if you think that there's absolutely no way in the world you can buy gold, it's probably the time to buy it. And that's what I'm hoping for out here. I'm neither short nor long. I am hoping that we get the kind of washout that gives us an opportunity in gold and gold stocks to actually buy it long term. But I digress. Oh, are we still on the air? Hopefully. I don't know what that was all about. Again, you can give me a call at 877-927-6648. You can email me at path@tfnn.com, and you can put a message in the den. Anyway, we're talking about a couple of stocks out here that were interesting. Monday, I started talking about maybe the problems in cars, especially yesterday when we talked a great deal about a lot of the people, including Wells Fargo and now Citigroup yesterday, getting out of those subprime auto loans. And I thought we were probably fairly close. I think we've got a little bit of confirmation from CarMax today. They are down. Volume has not really picked up, but they're probably rolling around somewhere down to this previous low of $60.83. A great deal of people are saying, well, it's the weather. People will come back and buy cars next month. People will buy cars next month. But that's going to be problematic. And, of course, the weather for the rest of this week, all the way from the Midwest to the Northeast, is just going to be horrible again. So we are not going to get any real break. And probably spring, if it comes to the Northeast, would probably be next week sometime. And that's going to take us at least in halfway through March, which means we're not going to see a lot of change in sales figures, I suspect. But some of the other things I'm looking at here today. What else do we have? We've been talking about AA and its particular issues. It was downgraded today. It has broken the previous low with significant volume, which now opens up the October 15th low at $13.71. And you got 32 million shares already today. We were talking about maybe the volume of aluminum cars is not going to be as big with crude prices as low as they are. I think that there was a lot of belief that, that $80, $100 crude was going to be there forever. And, of course, Ford was talking about maybe turning all their cars into aluminum-based cars if the Ford 150 basically worked out. Of course, it was $3,000 more expensive to build the Ford 150. Probably going to be about $1,500 for something like a Ford Focus to make it in all aluminum, more expensive. And it gets you 2.5 miles per gallon more. If gas is $3-4, probably a little bit better. still problematic. But you got plenty of volume out here to suggest we at least come back out and test the October 15th low that had 36 million shares. So look for 1371 as a possible bottom down here, but we need to see what kind of volume we end up with today. But 32 million shares, I'm going to say we're probably going to have 36 million shares. We and are severely into that October 15th candle, and I think it's coming back. Okay, got a question from the Den. Can you explain how in China Apple sales surged, yet Cisco equipment prohibited and Qualcomm just made a huge payment? Thanks for your review. Basically, all the equipment being prohibited is only 7-8 days old, 10 days, and it's not even prohibited per se. It's on a list of things that you can't buy just in the government. So you could still buy a Cisco router if you're a private company, and you may have to for a while. What they're saying is they're not going to allow Cisco routers into any military or government position unless you give them all the source code and all the design infrastructure stuff so that they can go back and physically check on it. Of course, I played that little clip on Monday from the NSA chief about whether or not, are we going to give backdoors to everybody that wants them? Because, of course, the NSA says that they should have them. So why would China say that they shouldn't have them? Of course, if you give them all the details, what's to keep the Chinese from just copying it? And that is the rub, dear friends. What do you do? And my guess is that there's not a good answer out there. Either you give them the information, get some short-term sales until they develop it all themselves and build it internally, in which case you're selling your seed corn for next year, or you take it in the chin right now. Most CEOs are pretty cowardly. They will say they'll fix the problem later and kick the can down the road. But I would be severely worried that Cisco gives them all the information that they need to build their own routers. Cisco will never sell another router after that. 6 months into it, they'll have a router with the exact same source code that Cisco has and never buy another one. And worst of all, they'll probably be selling that same router outside the Chinese borders, making the problem even worse. But I've seen far too many people go down that road. But yeah, the problems with Qualcomm, probably more about them not willing to give up all the source code. So this is kind of a payoff to chase them out of the market. But I think Qualcomm's issues probably a little easier to get by with. There's not a lot of things that Qualcomm can do for the NSA. It's got to happen at a higher level. Certainly Apple they're saying that they have to give all the source code for all the apps and all the software on Apple iPhones to them. And that may be more protectionism than anything else. But right now, the ban is only on government and military. It's not on everything. It's not on consumers, but that would be nice. Yeah, all the SIM card hacks, everything else has happened. Our roosters will come home to crow. Our chickens will come home to roost. I will mix another metaphor when we come back. Give me a call, 877-927-6648.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we come back, some other stocks with earnings. In fact, we're down to pretty much the last of the earnings cycle. There'll be a few earnings after the bell and before the bell here in the coming weeks. But it's pretty much, I'd say 95% over. We'll have a few stocks that are kind of out of the earnings cycle. And one of the ones I thought was very interesting out here was the Middleby Corporation, MIDD. You may not know this company, but you look at their products a great deal. They basically sell a lot of the stuff for food preparation. And what they've seen is a very few amount of these strip mall companies opening up additional locations. Anytime McDonald's opens up a location, or Subway, or all these other fast food companies open up stuff, they need to buy the ovens and the turbo cookers and the stainless steel tables and all the kind of stuff, and the stuff to put out soda, and the ice makers, and all the kind of stuff that you need to start one of those stores. And it kind of came as a big shock that business was way down. Now, you can make a case that, you know, maybe the weather was an issue, but it does not seem like they had anything to do with it. They just said business was slow. They had their earnings call about 10:30, so they missed their numbers, and it was down fairly extensively, of course, with the bad news earlier today in the market itself. But you got to look at this if you're thinking about the food service business, and you see McDonald's pushing everything, MCD. Everybody is just hot all over McDonald's right now, and I don't think you can watch CNBC or Bloomberg for more than an hour without somebody else piling on, telling everybody they should get in this thing. But my guess is the horse has left the barn a long time ago, probably down around 94, 95 bucks of a safe place to get in this thing. And of course, this is all on the idea that they can fix anything that's broken at McDonald's, not that anything significantly has changed other than they've got a new CEO. So you got to be watching that. I see Tom O'Brien is warming up in the den, and of course, he'll be here in the next 2 hours. See if there's anything else. Let's take one more look at this market. I just didn't see the volume earlier today. In fact, when we started seeing the IBB go back up to highs, I didn't think that there was a lot of chance to come back into this market and see it go lower. 2098 on the S&P cash as we speak, 2.41 billion shares with 1 hour left to go. So that means that we've had a low volume attempt to go lower. I can't say that we'll go lower tomorrow, but I would not be surprised to see a little weakness maybe on Thursday and Friday, and look for the tsunami, the Sharknado, if we can go so far, of Apple PR starting on Monday with the Apple iWatch. A little of it will probably have any substance. There will be prognostications ad nauseum, and we can see probably 2 or 3 days where Apple will be able to carry the entire market. I suspect if we get up there and the only stock that has any volume is Apple, that will be our answer. But I would not be surprised to see Apple not, someone will come out with something about the iWatch saving their lives, or talking to dogs. There'll be something out there, and they'll gap Apple up, and that'll be enough to gap this market up too. No volume, time to set the hook. Volume, time to buy the pullback. We'll see you tomorrow. Same bat channel, same bat time. See you then.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.